Hey everyone, welcome to another episode of AdMail. This is Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Everyone, and welcome to another episode of AdMail. I'm Adam Bergman, tax attorney, founder of IRA Financial. And on today's episode, this is a really good question. This question is from Carl M. of Pittsburgh, Pennsylvania. Carl wants to know, if I want to do a real estate sale leaseback transaction and I'm using debt, do I have to worry about the UBTI tax? Okay, so let me break down this question in a couple parts. And Carl, thank you for the question. Number one, sale leaseback transaction essentially means that you own something and you're going to sell it to a party who's going to lease it to you. And this is very common. For example, like Walgreens, CVS's, they do this all the time. Okay. They'll do a deal where they will buy a property and then they'll sell it and then lease it back. And there's tax reasons for it, but it's common in a lot of commercial real estate type of scenarios. So a lot of IRA investors want to get in on it because it's also proves to be a pretty lucrative deal because you have a guaranteed tenant. Most of these sale leasebacks are involving large commercial tenants, good credit. You're not going to do it with like a mom and pop shop, right? These are legit businesses. So you get steady flow income. You can always refinance a loan down the road. It's a good play on both parts. So these are really popular transactions. A lot of IRA or 401k investors want to use leverage when they do this, meaning they will buy the property. So they're going to need cash to pay the Walgreens or the CVS or the business for that property. So generally they're going to put down 10, 15, 20% and then borrow the rest. So IRAs, you've probably been watching or listening to this podcast or various other videos, podcasts, where I talk about the UBIT rules. And the UBIT rules get triggered, and UBIT, unrelated business income tax, it's a tax under 514 of the tax code, 512, 513. And 514, what basically says in these three scenarios, if you use IRAs or 401k funds to do a deal, you can trigger this tax, which can go as high as 37% in 2022. It follows the trust tax rates. Essentially, if you use marginal by stock, non-recourse loan to buy real estate in an IRA, we'll talk about an exemption under 514c9 that allows a 401k to use leverage to buy real estate. And thirdly, if an IRA or 401k invests in an active trader business like a restaurant through a pass-through entity like an LLC. Now, there's obviously exemption if you invest in a corporation, and 99.9% of all publicly traded companies are corps. That's why you probably never heard of UBIT or never had to deal with it, because if you're buying Apple or Tesla or any publicly traded stock, they're corps. You don't have to worry about UBIT. But UBIT does come up if you're investing in private placement, private businesses, real estate funds, private equity, if there's leverage, hedge funds. So something to be certainly cautious about. Now, I mentioned 514c9 has an exemptions where a 401k, even a solo 401k, could use a non-recourse loan to acquire real estate without triggering this UBTI tax, which is a super powerful tool, very, very friendly tax strategy for 401k real estate investors. Now, there is a situation where under 514c9b, there's an exemption, and this is what it says. If the real property at any time after the acquisition is leased by the qualified org to the person selling such property. So a lot of people don't realize this, but if you look at 514c9b, little 3, there is an exemption on the exemption for sale leaseback, meaning if you do a sale leaseback transaction, the exemption to the UBIT rules under 514c9 do not apply, meaning you will pay UBIT tax if you have more than $1,000 in net income, if you use leverage in an IRA or 401k to do a sale leaseback transaction. Even though there's an exemption for real estate acquisition indebtedness in a 401k, using non-recourse loan, there is an exemption to that exemption on a sale leaseback transaction. Don't ask me why. Seems kind of remote, kind of random, but that's what the code says. So if you're doing a sale leaseback transaction and you think you're going to take advantage of the 514c9 exemption for the UBIT tax rules For 401ks, think again. It's not going to work. It works for regular real estate acquisition. If you go just buy real estate from party X, party Y, and use a non-recourse loan. A non-recourse loan is a loan you're not going to personally guarantee. Why? Because you can't personally guarantee a obligation or IRA or 401k. That triggers the prohibited transaction rules under 4975, so that you can't do. So that's why the loan must be non-recourse. But if you're doing a sale leaseback, that UBIT exemption under 514 C9 won't apply. So Carl, great question. I'm not sure if you were going that way or if just kind of wanted to do a sale leaseback and was worried about UBIT, but really good question. Thanks for listening to the podcast. If you're watching on YouTube, appreciate it. And come back for more. Talk to everyone again next week. Take care of yourself and be well.